Investors and traders, welcome to the channel Market Chart Pattern. Today is 16th of December 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US tech stocks that we follow for this segment, and we'll be taking a look at the daily charts. We'll focus more on the weekly charts and also on the monthly charts because of the weekend review. This video is for educational purposes only and is not a financial advice. So let's start with the Tesla Motors. So the Tesla stock had been in a sideways trading range for quite some time. In fact, since pretty much the middle of the November, we have just seen the stock go sideways. The interesting thing is that after it made this one-to-one price projection pattern ABCD, the price had been creeping up ever so slightly, and we also had this declining trend line here, which I have not drawn here, but you can imagine this. Let me actually try to draw it like this here, but we have seen the price come and actually reject this level, and we have had three positive candles appear here. So now the pattern formations that we have been looking at, because our key level, which is point D, has been so far intact, we are actually looking at the pattern formation, which we have been discussing for quite some time here on the weekly chart. Up to, it's still possible that we could in fact see $350 per share level for Tesla. So this point C here, let me actually move it here like this. This point, which was formed on the 30th of October 2023 week, has this is our key point, our key support level. As long as this is intact, we are looking at this possible formation of the ABCD one-to-one price projection higher, right into roughly about anywhere between $340 $350 per share level. And this is where we have a pretty strong resistance coming, because we have the 78.6% Fibonacci retracement, our pattern formation one-to-one price projection ABCD coming, and also a 1.618 expansion around $355 per share level. Because of the confluence of these three things coming together, it'll be very interesting to watch the price action, which we will be watching very carefully for this stock, because in my opinion, this is where the game will be played, whether it was just a rally in some sort of a bear market, which personally I do not believe, or whether it is able to, in a very strong manner, come out of this resistance level, possible resistance level. And then of course we have this $415 per share level, which is the highs which were formed on 25th of October 2021. Now moving on to the monthly chart, if let's assuming that that level is broken to the upside, what we are looking at is remains a possibility, if these highs are taken out, $500 per share level for the Tesla stock. Whether it'll get there or not, this is really for long-term investors who actually believe what the Tesla is doing, long-term holders for the stock. The pattern formation, as long as this point C is held, possibility of reaching $500 per share level. And if we just look at this on a monthly chart, we have this trend line, which is a down sloping trend line. And if we have a close for the month, which is able to take this trend line out to the upside, that's going to be a positive indication for the stock. Okay, let's move on to Apple. So the Apple stock, when this pattern formation formed on Apple, let me actually bring it into focus right here. So this is the roughly about $200 per share level. We had a key pattern formation around here. I'm not going to go into the details of that. You can watch the older videos. It was a pretty strong resistance level, and we were talking about a possible pullback in the stock, which we have in fact seen, and that we were really watching anywhere about $165 to $163 per share level on the daily chart for the stock to reach those levels. And the stock pulled down to as low as $168 per share level, so slightly missing our $165 per share level. And the reason we were watching that was because that was the 61.8% Fibonacci retracement, but it came pretty close. You know, it's a $200 stock, so you know, missed it by a couple of dollars. And now what the stock is doing is it is challenging its all-time highs here again, right about the $200 per share level. And here it could actually go into a little bit of a consolidation before it's building up the energy to move higher. And as long as this does not transform into a double top formation, we have a higher level of about $218 per share level, and that is the 1.618 expansion of this range right here. This stock was in this range for quite a while. In fact, from December 2021 to January of 2023, when it was forming this low, and we were informing that it is forming a key pattern formation. Because we are looking at really long-term charts, this level around 128 to 122 level per share was really important support, because look at the confluence of Fibonacci ratios coming together, and of course we had a pattern formation there. Stock was not able to take these levels down to the downside, and this is when we were becoming really bullish, when there was a lot of chatter about Apple maybe topping because of the tops that we had seen. In fact, it was just a trading range. Let's also quickly take a look at this stock on the monthly chart, and here we go on the monthly chart level. Okay, so again, $218 per share level, or roughly about $220 per share level, as long as these $200 per share level is broken to the upside. These are the short-term targets to the upside, and we are watching the price action on the daily chart, and we'll keep you informed. The interesting thing to watch on the monthly chart is, look, this simple trend line and how it is intact around here. And the purple lines that you see, these are the symmetric, which we'd like to call market symmetry. And as long as these lines are also remain intact with the trend line, the stock seems to be in a pretty good shape, at least technically speaking. Let's take a look at Microsoft now. So the Microsoft stock, a pretty strong stock. From a momentum perspective, fabulous, broke out of this tight trailing range, quite similar to, but the price action is in fact pretty different to the one which we have seen for the Apple stock. And we were watching for this level on the daily chart. Let me actually go back to the daily chart for real quick, just to show you that. So we were watching this $380 per share level, because that was the 1.272 Fibonacci expansion of this range, and we have seen the stock actually pull back from there, and it's just, it's been a couple of weeks, it's been like that, and where it is at the moment is just draw a retracement real quick, and we click on the 38.2% Fibonacci retracement. Oops. And the 38.2% is actually quite lower. So this stock, what it is doing is, in fact, is finding structural support from these old highs, so one-time resistance, now acting as potential support, and really hanging around the 38.2% Fibonacci of these lows. And moving back to the daily chart, what we are looking at is that some sort of consolidation to take place in this region, and we have a smaller price target to the upside around $400 per share level, and the 1.618 expansion comes around $433 per share level. But look, guys, this stock has actually risen fairly high since 31st of October week of 2022, and it can go into some sort of a consolidation, but these are the short-term targets that we are looking at to the upside if it is able to break out of this $385 per share level. And looking at the stock on the monthly, so this is the monthly chart. Here we go. Really wanted to quickly show you how this stock has been nicely moving when especially with the new CEO, Mr. Nadella, he took over, and he took the stock from being at $30 per share level or so to where it is now. So the fabulous improvement. The stock has gone into so many different streams, particularly the cloud side of things, and now really a big player into the artificial intelligence, and it has a partnership and a stock shareholding in the ChatGPT software parent company. So really interesting stuff happening there. From a monthly chart perspective, we can just clearly see the 1.272 expansion right here. And you know, it's fairly possible the stock might actually form an inside month for the month of December, might digest, might pull back a little bit, and some catalysts will then begin to take the stock higher if it is able to break above this $385 per share level to 1.618 expansion, which comes around $430 per share level. So this is what we are looking at in Microsoft. Let's take a look at the other stock. Let's take a look at NVDA. Okay, so there we go. So this is the stock of NVIDIA. This is the weekly chart for NVIDIA, and what we are looking at is $500 being a pretty strong resistance for this stock. So this stock has done phenomenally well, you know, since October of 2022, and it has just, you know, you look at just this ABCD pattern formation here. It just doubled in that price point from the point C, and in fact, you know, more than that. So it's really phenomenal performance. And what we are looking at is we have a couple of things in terms of the pattern that we are watching. We have some Fibonacci expansions coming around the $500 per share level, and we have you know, this pink shaded area is just kind of highlighting that, and we have just seen the stock go in a sideways range. For a stock that has moved so quickly in such a short time, I wouldn't be surprised if it is able to pull back right into its 38.2% Fibonacci retracement, which comes around $350 per share level, right at around the old structural highs. But it's possible that, you know, it remains in a tight trading range, or tight for this stock, where we have the lows here around $400 per share level, and you know, the highs around $500 per share level. So in a $100 range, it just keeps on moving in a sideways trading range, and eventually break out to either side, which we'll have to wait and see. So this is what we are watching in Tesla. Let's take a look at Shopify. Let's actually go back and take a look at the daily chart for this first. So this is the daily chart for the Shopify. It's related to e-commerce. They provide like a shopping cart, a website, which they host on their own servers, etc. And there seems to be a growing trend for this, which is reflected in the price here, but I'm only showing you the half of the picture because there was a massive decline in the price. We'll take a look at that on the weekly chart. But in terms of the shorter time, we were watching for anywhere between $78 to $80 per share level, and that's because around the $80 per share level is our 38.2% Fibonacci retracement from the all-time highs to the lows, which took place around 13th of October 2022, so about more than a year ago. And we also have the 1.272 expansion around the $78 per share level, and this is what we have seen. So this stock is pretty much right at our target. It may continue to move higher, maybe up to $82 per share level, but this is the region that we had been watching for quite some time, ever since this 1-to-1 price projection ABCD pattern completed and the earnings came out, and fantastic move to the upside. So this is what we are looking at on the daily chart. Moving on to the weekly chart, what we see is a possible pattern highlighted in the blue lines here. This is a 1-to-1 price projection, which could in fact see the this stock maybe attempt $100 per share level, given that it's able to take out this resistance level around $82 per share level. This is where we have the 200-week moving average coming in as well, so there is a fair amount of resistance in that zone. and the pattern formation in that case will be around $100 per share, roughly speaking. We'll then keep on watching the stock and see if it is able to make a recovery high, and in fact, you know, make a go on the all-time highs. This is what we are looking at for this stock. Let's take a look at now Amazon. So this is the e-commerce giant. This is a stock which really likes to do double bottoms and double tops. And this is in fact what it did when it was forming its low back in the beginning of the year 2023. It's trading right at the 61.8% Fibonacci retracement. We had a nice week closed higher, and if it is a maybe it was a double top formation, but with this close higher and this high being taken out, maybe it's I need to remove this as a possibility. I had a question mark there. So looks like this stock is actually getting pretty strong and looking to move higher. Of course, it's the fourth quarter. From the retail side, the sales could be pretty nice, and of course their AWS segment is the profitable segment, which seems to be doing pretty back, or is back at track. On the daily chart, what we really see is that the price action, not really convincing price action, at least from my perspective. It did take these highs out, and on the weekly chart looks much cleaner. But what we can see is back and forth. So just really watching this stock. Whereas on the Shopify, the trend was much clearer. Okay, let's take a look at Meta now. Okay, so I'm gonna move. Yeah, so this is the daily chart for the Meta stock. The Meta, formerly Facebook, it made a fantastic recovery. So this stock went down 78.6% Fibonacci retracement. This is what this blue line is from its all-time highs, which formed back in the August of 2021 and bottomed around 4th of November 2022, so a little over a year ago. And here, fantastic recovery. We became bullish on the stock when it was able to take out $200 per share level, which was the 38.2% Fibonacci retracement, and we have seen a fantastic move higher. Now the stock is obviously above its 78.6% retracement, which is around $320 per share level, and it seems to be moving or creeping rather to the upside. And one possible pattern that we are watching might be around $360 per share level, where we could have a possible 3 drives to a top pattern formation. Whether it will be a top or not remains to be seen, but we had similar kind of pattern formation taking place around here, and there was a very nice symmetry there. So whether something like this might take place or not, we'll have to wait and see, and we'll have to really watch the price action if it gets around $360 per share level. So this could also be, you know, kind of ending diagonal, maybe in terms of Elliott wave formations, but what we are watching. It seems to be just creeping higher and pulled back a little bit from $340 per share level, $44 per share level, which is around 1.272 expansion. And as long as this low is held, another pattern formation could be an expansion to around $360 per share level. This is what we are watching on the daily chart. On the weekly chart, here we go. So that's the 78.6% Fibonacci retracement. I'm gonna make it a little bit smaller so that it's easier to see, and that was around here when that was happening, and we can see that we have a 1-to-1 price projection around here, around this level as well, and the stock is just, you know, kind of in a sideways but dragging higher. So that's good for Meta, but key price level $360 per share level. This is what we'll be watching. Now let's take a look at Netflix. So this is a weekly chart for the Netflix, and there's a possibility maybe it just goes and hit that 61.8% Fibonacci retracement. Ultimately, moving back to the daily chart, here we go. And on the daily chart, you know, we were initially watching for this $495 per share level around here. The stock came pretty close and then went into a correction, and they did a one-to-one price projection right here around 38.2% Fibonacci retracement, 61.8% retracement. So confluence of a few things coming together, and we had a very nice move higher, and now it's just kind of stuck to the sideways. So maybe it's able to creep up and reach the 61.8% Fibonacci retracement. This is what we'll be watching for in terms of the price action for this stock. Okay, so let's move on to something related to Bitcoin. So we'll take a look at the coin. This is the Coinbase, which is an exchange for cryptocurrencies. And here we go. This is something which we also discussed when we did our last video for the individual stocks, for the tech stocks. We were watching for this one-to-one price projection, ABCD. I haven't labeled these, but this is the subscribers know what we're talking about in terms of the pattern. One-to-one price projection. You take this and you project it from here. And the reason we were doing this was because this is where the price was really close to 38.2% Fibonacci retracement, and also we had a pattern completing here. So this is the region that we should be watching. We saw weakness come in on daily chart last Friday, and let's take a look at on the weekly chart. Here we go. The weekly chart is you know, it had a nice positive end to the week, so that's good, but we'll be watching the price action around this region because of the 38.2% Fibonacci retracement and the possible completion of this one-to-one price projection pattern. Let's also take a look at the Bitcoin, but we'll take a look at the Bitcoin through the eyes of the ProShares Bitcoin Strategy ETF. Here we go. So a similar kind of pattern formation to the coin. So we have 38.2% Fibonacci retracement coming in around a $22 per region per share level. 22.74 is kind of the exact level. We also have the one-to-one price projection, ABCD. So when we did the video last week, sometime, I don't remember the exact time, but the video is there. I'll put a link to it towards the end of it. The market was somewhere around in this region, and what we have seen since then is so this is the Monday price action. In fact, on Monday, it actually opened lower, and then it has crept slowly moved higher to fill this gap in, but it remains in that region where we have the ABCD pattern completion and also a 38.2% Fibonacci retracement. So what it means is that to be careful in this region, because there is a good chance for a pullback to happen. That pullback may be a straight line where it just really quickly moves down and maybe try to attempt to reach the 200-day moving average, which is in the gray line, this gray line here. Or if we just draw, assuming this is the top, we don't know whether it's the top yet, but if these lows are taken out, then we'll have a better confirmation. So the 38.2% retracement comes around 1860, and the 61.8% comes around 1650. And if we were to just draw a retracement around this low, and again, just assuming that this is the top, which is not confirmed yet, and we just look at that. So we have a confluence of a few things coming in this region of about 1580 to 1650. That's where we have the 200-day moving average, and we also have the 50% retracement from these levels. And this region is also between the 61.8% and 78.6%, which I haven't drawn here, but let me actually quickly do that. So this zone is to be watched here. If the price ever pulls back into this zone, which could be a good support zone around here, and we'll also have a pattern of higher highs and higher lows. And if we were to just draw a nice trend line like this, it also falls. I haven't drawn it properly, but this will be, 78.6% retracement level around here. Around $15 per share level will be something to be take a note of. So this is what we are watching in the key US stock indices, the key tech US stocks that we like to follow. And if you found this video of good value, please do subscribe to the channel. Apologies, the video got really long, but we had a number of stocks to cover. I think I will try to make more videos and perhaps cover less stocks, so that way the videos are not that long, and maybe start a different segment to cover the cryptocurrencies and the related stocks. We try to cover that. So thank you very much for watching the video. Wish you good luck and good trading, and have a great weekend.